I have done this. It's called kind of a chart pattern called Candle Glance. It's in stockcharts.com. And this is looking at a shorter time frame so that every candle here is a day of trading. And we can concentrate on what happened the week of the 22nd. So you can see the line here to the 22nd and everything to the right of it. These 5 candles are the 5 candles of this week. So what happened on QQQ? Well, the way we have drawn these charts is we have sorted them by the rate of change over 5. There's a parameter here, rate of change by 5 days. So that means that is the week of movement over 1 week, and it's a moving window. What percentage change of the specific ETF happened? And we can notice that the rate of change for QQQ was 3.94%, almost 4%. And that was quite a snapback from the rate of change it was towards end of last week when it closed. It was almost as much as negative 5%. So remember, there's this thing about a rubber band. When you stretch it extreme on one side, usually it snaps back and goes the other direction quite aggressively. That's what happened in the market. In particular, the biggest pullback was in QQQ from a rate of change perspective at -5 towards the end of last week, and we got a snap back from here to 3.94, almost to the other end of the spectrum, close to 4%. The next one was emerging markets. They also had a big pullback of almost 5%, but that was not so much towards like the end of last week, but more towards the early part of last week. But that also snapped back close to 3.68%, and it had a reasonably good move as well. And part of what could have caused it is emerging markets do have movements with one is Indian election. Prime Minister Modi is standing for re-election. There's a very good chance he gets elected. The market is very bullish about his chances to get elected. So Indian market has been kind of towards its all-time highs, and also China and the overall commodity. There was a big commodity merger announced, a $39 billion BHP to Anglo American, and that caused commodity stocks and the emerging markets to get a bit as well. So that was a big snapback from -5 to 3.68%. So that was the second big ETF that did well this week. Small caps did also reasonably well at 2.7%. So it also had a -5% drawdown earlier in the week last week towards the April 16 timeframe, and from there it snapped back with a 2.7% move this week. S&P had a 2.65, pretty close to the small cap. It didn't have as much of a 5% pullback, but it had closer to a 3% pullback from a rate of change towards the end of last week, and from there it came the other end. Dow Jones index is more of a large cap stock index. It had much of I would say a smaller move this week. In particular, IBM is a big Dow stock. It had a negative impact on the market. Boeing is also a Dow stock. It had a negative impact on the market, and both had pretty bad post earnings movements. And so that's where Dow Jones didn't do as well. It was only up for the week at 0.66%. The dollar was up. It was actually down for the week, down just about flat line at -0.23%. Bitcoin also had a down week. In particular, we're using the proxy of Bitcoin by the largest ETF, the Grayscale GBTC, and that was down 1%, -0.99. TLT, the 20-year ETF for long-term treasury, that actually had a negative movement as well for this week, down -1%. Gold, which had shot the other extreme of, while things were down -5%, gold was actually up +5% towards early April. And we know that this was primarily the big Israel and Iran kind of drone attacks either way, and that had caused geopolitical uncertainty. It's a safe haven buying, and gold had done very well early April. So from that first 5% move from a rate of change, that's again the 5-day moving time window on gold, it pulls the other extreme. Early part of this week, it had gone down to -2.5% and closed the week at -2%. Silver also had, as you can see by these extreme moves, by how far they deviated from their 20-day moving average. So each of these charts, the blue line is the 20-day, the red line is the 50-day moving average, and these are simple moving averages. So you can see that the fact that gold had kind of moved that far away from its 20-day was why the rate of change had shot up to almost 5%. Silver, in a similar way, had even more movement, had gone up almost 10% rate of change by early April 8th. And from there, it came back to minus 5% and closed close to minus 5% for the week. And volatility, that's a key indicator of market fear. Last Friday, volatility had spiked up to 21. Any movements above 20 indicates reasonably good amount of fear. And however, the key barometer, and this was something that we did talk about in the blog as well, is when you have a candle that's a dark shaded candle here, that means VIX opened near 21 and closed towards the lows of the day below 19. That kind of candle is a reversal candle and was indicating that VIX would likely be downward trending this week, and that's exactly what happened. Pretty much from that level near 19, it closed near 15. So from a percent wise, it was down 20%. And look at what happened from a directional move in VIX. Twice this month, it crossed the 20% move. So you can see the rate of change had hit 20 around April, maybe 6 or so. It again hit the 20 level on the April 15th timeframe. And since there, it's come the other way to the minus 20%. So that's, again, a classic example of a rubber band going the other side and snapping back. Now, what is the key patterns that we're seeing in terms of the trending moving averages themselves? So that was the rate of change, is how we sorted them. But when you see a 20-day moving average having a bearish cross below the 50-day moving average, and when you see the moving averages curving lower, that's a bearish trend. That means a bearish trend has resumed, where the 20-day now is below the 50-day. The 20-day is pointing lower, and if the 50-day was climbing, that bearish crossover wouldn't have been as bad. But the fact that the 50-day has plateaued at near 436 or so, and now it is pointing lower, and red line is the 50-day moving average, that means that the trend now potentially is pointing lower. We did get a snapback rally from 413 to 432 today was the peak, close to 432 plus. And then we didn't close at the high, we pulled back from it near 430. That could be a potential snapback test of the QQQ, and this failing at the declining 20-day could mean that we could resume a drop. And in this blog, I talked about a potential pattern, not this one, not the Dow Jones, not the Intel, but this blog that I posted on Monday. And you're welcome to go take a look at that blog. I did talk about that snapback to 429, but after that, I had said that what about if we draw a neckline around this 413 to 415 level? This move from there to 429 is the left shoulder. Then from 416 to 449 is the head. It came back down to 413. And now we're forming a right shoulder with that move to 429. We didn't symmetrically meet 429. We slightly overshot and went up to 432, 33. But what if this then breaks down? What is the measurement? Well, the measurement of a head and shoulder, when you have a left shoulder here, a head, and potentially this right shoulder, is take the neckline at 413, take the head at 449. That's 36 points. Subtract 36 from 413, and that gives you a target near 377. What's interesting is there are gaps in QQQ chart. There's a gap here that I highlighted near 407, and then there's a gap here near 376. So if we do get a drop, and that's what we say, a potential target near 377, that would mean, if you think about it, from a 449 to a 377, that's almost a 72-point drop. And the 72-point drop is almost close to less than 20%, because 22% on 449 would have been 90 points, but it's close to, you're talking about almost 72 is close to 18 or little less than that, 16% actually is the drop that we might get. So that's something to look at and something to consider. So now going back again to the candle, so this is a bearish crossover. This one on the emerging market has not yet crossed over. The lines have gotten close. We can see that the red line, which is the 50-day moving average, is still climbing. The blue line, however, has started curving lower. So if it's, and today we did get a gap higher. This is called a gap up. From 40.5, it opened up above 41. So the emerging market had a gap up movement today. However, if this fails here, because potentially we could be hitting some forms of resistance, because in the past we've come near below 41.5 and then have snapped back. If we do climb back lower, because there wasn't as much volume this week, all 5 candles this week were higher, but not as much volume. If that does come lower, then you can expect a bearish cross of the EEM 20 going below the 50 as well. Small cap, identical bearish pattern as the QQQ. The shorter term moving average, the 20 days curved lower. The longer term, the 50 days plateauing and beginning to perhaps curve lower. So when both the 20 and the 50 have a bearish cross and they start curving lower, it starts a bearish trend and something that we need to watch out. This one here, S&P 500, already got close to the bearish crossover. The blue has crossed the red. It's just at the convergence there. And over the next few days, weeks, we have to watch if this crossover then starts heading lower on the 20 and the 50 plateaus out near 510 and starts coming lower. Dow Jones in the ETF for the Dow Jones index is DIA, Diamond, and that one already has a bearish cross of the blue line, the 20-day below the 50, and the 50-day has plateaued out as we can see and now headed lower. Dollar by far is the most bullish looking chart here, UUP, that's the ETF for dollar. We can see that the 20-day moving average is actually climbing. So is the 50-day. Both the blue and the red moving averages are climbing and they're diverging, they're widening. That means there's a strong bullish trend. And I'll talk more about it. The dollars, I had a chart on it and I had a prediction on it in one of my previous analysis saying that the UUP near-term target I'm expecting is near 29.6 and today it closed near 28.9 or 28.89. So there's still more upside on the dollar or the UUP. GBTC, which is the grayscale, the largest Bitcoin ETF, does have a 20-day moving average curve lower. The 50-day is climbing. So it depends. It's possibility that we could perhaps maybe get a breakout higher. But if this breaks down, as in we get a bearish cross of the 20 below the 50, then we need to watch if the 50-day kind of plateaus and moves lower. In that case, there's a possibility that Bitcoin could be downward trending. TLT is directly correlated to the 10-year yield chart. I'll talk more about the TNX, and I expect the 10-year yield to climb further. A key breakout level of the 10-year yield was at 4.35. It broke that. The measured target on that is 4.93. So if it's headed to 4.93 and it closed near 4.65 or something, it did touch 4.7 this week, it means TLT heads lower. As 10-year yield climbs, TLT comes lower. And TLT's target actually is below 85, something that we are watching. GLD, interesting enough, is a bullish looking chart like UUP. You can see that the 20 and the 50-day moving averages, both the blue and the red line are climbing. It came back to test it, but it did not break lower. That's a bullish sign. So it came down to test it. It's hugging along the 20-day, but just hugging along the 20 and climbing. It didn't break lower. Something to watch and see maybe it continues to get a bid as market pulls back. Silver in a similar way, pull back to test its rising. And by the way, both GLD and SLV do have upside targets above these current levels. The GLD target I have is 236. The SLV target I have is near 31, 32. So both have more upside left, and it's possibility that they just came back to test their rising 20-day moving average. And if this bullish trend continues, they could both resume their climb. VIX, on the other hand, it doesn't make sense to look at VIX from a pure chart analysis, but sometimes you'll be surprised it does pan out. So if you look at VIX, it pulled from 21 to 15. It is testing its 50-day moving average at the right line. It closed right there. If the market has to continue its downward movement, QQQ has to go from very close today near 431 down to 377. There's a very good likelihood VIX will climb back and reclaim 20 and go higher. So that's something to watch. And with the rate of change from 20 to minus 20, what is this indicating? It's indicating a lot of volatility. It's perfect environment for those that are looking to do options and so on, because volatility helps options premiums.